Welcome to Reshair on ESPN 730. For the next hour, your host, Chris Reshair, will bring fresh air to your financial needs. Excite, educate, and empower you to make sound financial decisions. Chris is a seasoned licensed mortgage consultant with NFM Lending. Originator license number 117266. Now, here's your host, Chris Reshair.
Welcome to Reshair Radio. I'm your show host, Chris Reshair, Senior Loan Officer with NFM Lending. NFM Lending is the Equal Housing Lender, license number 117266. Each and every week, if you've never listened to Reshair Radio, we are on here. And what we do, folks, is we bring in local area experts into the studio that talk about the housing Charlotte market, that talk about real estate. We talk about mortgage finance. We talk about insurance. We talk about all kinds of stuff. But I'm just a licensed loan officer with NFM Lending. I am not an expert in all financial areas. We even have a financial planner who supports our show. So my goal each and every week is to help you make financial decisions in different areas of your aspect, different spokes on your wheel, if you will. So really super excited about our show today. So what I'd like to do is kind of jump in and let you know who our guests are on the show. So first of all, I'd like to welcome Curtis Gravitt. Welcome to the show, Curtis.
Thank you. Glad to be here.
Curtis, now you work with a company called Real Estate Realty. Super unique name, right?
Yes, sir.
Real Estate Realty. So we're really excited to have you here. And you've been supporting my business 2018, some in 2017. And it's been a great relationship we've been forging together. But I'd like our listeners to get a little flavor for who you are, what you're all about as a realtor. And so if you wouldn't mind, just take a minute and share with our listener how you got started in the business.
Yeah, absolutely. My intro into the business is a little different than maybe most. I was actually a welder full time, and
that's cool.
Yeah, I went to school, and
we have listeners that are welders, right?
Yeah.
Shout out to all the welders.
Shout out. Keep doing what you're doing. But I was fortunate enough to work with a company who put me back to school to get my mechatronics degree. And basically what that is PLC programming and industrial maintenance.
That's what I was going to say.
So
not.
Yeah. You could have guessed.
That's right.
So that led me to the Charlotte area where a company headhunted me. I landed working 3.5 days a week, 3 12s and a 6. And that gave me the other half of the week to go to school and do whatever I wanted. About 10 years ago, I bought my first home, had a really great.
You bought your first home,
Yep.
And then from there, you kind of got interested in the real estate.
Yep. Had a really great opportunity with a lady who really inserted herself into my family as a friend, helped with other family members buying their homes. It was just a great situation.
So your realtor really kind of piqued your interest.
It did. She did,
right.
In particular. She was a wonderful lady, and I just thought it was pretty incredible to be able to spark relationships with people the way that she did and still do what she loved doing. Own her own business and set her own schedule and that sort of thing. So when I had the opportunity to go back to school, that's exactly what I did. I said, hey, you know what? I'm going to go to real estate school. And 3 months later, I was hitting the ground running.
Awesome. It's interesting, I think, for me, too. I mean, I have a degree in counseling, right? My first real job was a high school guidance counselor, really not too far from here, up off of Beatty's Ford Road. I worked at West Charlotte High School. West Charlotte, go Lions, all right, for our Lion listeners out there. But, my dad was a builder and was really looking to sort of find a way to provide for my family. I was struggling to do that on a school salary, and I feel bad for even saying that, but it's just kind of the reality in working for the school district. And me too, I was like, gosh, I love real estate. I didn't even really think of mortgage. I was thinking about being a realtor, but I was not set on kind of the weekend gig. So I was like, I think I'll try the mortgage hand first. We'll see if that works.
Yeah.
But it is interesting how you when you grow up, you think you want to be one thing, right? And then you end up being something totally different. And then you change and you change and you change.
Absolutely.
So I still don't know what I want to do when I grow up, right? Not about you guys. So, well, that's good. It's interesting you got started that way. So from there, obviously your realtor got you peaked, your interest peaked in doing real estate. How did it morph from there?
Well, as I went to school, I've always had an entrepreneurial spirit, as some may say, and I wanted to own my own business, set my own schedule. It was very appealing to me to be able to directly receive the impact of what I was putting into something. Of course, I'd be lying if I didn't mention the fact that being home with my family and being able to do the things that I want to do whenever I want to do them is great. That's not always the case in this business, but so when I went to school, I came out. I got inserted with a really great brokerage who gave me an opportunity, helped me work with investors and buyers and that sort of thing, and just haven't looked back since.
Cool. And you are licensed in North Carolina, is that right?
Yes.
Awesome. And you do actually, unlike most realtors that I have on, you do a combination of residential and commercial.
Yes, sir.
That's pretty cool. That's pretty unique finding a realtor that does a little bit of both.
Yeah, my first clients actually were investors. I wanted to work with buyers. I love working with first-time home buyers, but that's just the cards that were dealt. So I really had to.
Or you just take what you can get,
yeah,
right?
That's right.
All right. Well, let's flip over to you, Jay. Jay McElveen with Goosehead Insurance is here as a guest as well today. So, Jay, welcome to the show.
Thank you so much. Thank you for having me.
Yeah, glad to have you. We've been working together for a little while now. It's been a great relationship so far, but I've been dying to have you on the show. I know everybody out there just is held on the edge of their seats. They can't wait to talk about insurance, right? But why don't you tell our listeners a little bit about who you are, your agency, and so forth?
Of course. So I am Jay McElveen. I'm with Goosehead Insurance. I'm from a little town called Malden, South Carolina. Insurance has been in my blood, in my family. I recently moved from Charleston, South Carolina, about a year ago. I was there for 6 or 7 years after I graduated Clemson. So,
cool.
And I was right out of Clemson. I went into politics, and I loved the networking aspect of it. But politics, put that aside. I wanted to find a long.
What's the base salary in politics?
Very low.
It's pretty much zero almost.
Exactly. But that it wasn't about the money. It was about the service, and I loved it. But I knew that I could not probably support a family on a political salary. So I decided to follow in my family's footsteps in the insurance industry. So I moved to Charleston, started in insurance. And for about the past 6 years, I was there doing insurance. And I recently moved to Charlotte, like I said, a year ago. My wife lives here, my fiance at the time, so she was ready for me to move to Charlotte without a doubt.
Make the commitment.
Exactly.
Same thing happened to me. My wife's from Charlotte. So.
Exactly. So I moved here a year ago. I did a lot of searching for the right fit for me, and Goosehead was that fit.
Cool.
So, yep.
Awesome. So what makes Goosehead? Well, maybe we'll save that for later on in the show. But I want to make sure that we have a time to get the rest of our intros here before our first break. So, Curtis, one of the things that I want you to take a quick minute and talk to our listeners about is, what do you like most about servicing or being a realtor?
I think I already mentioned this, but it's really just the chance to meet new people, to be a part of different people's lives, and really just help make dreams come true. I had a dream 10 years ago, and I never thought it would happen. Never thought I'd become a homeowner, and getting the chance to help and be a part of that process on a daily basis is really amazing. And and of course, like I said earlier, just the ability to set my own schedule and pursue my own personal goals as well, and open up family time for different various
having that flexibility.
That's right.
And I see that a lot when I have people on the show. A lot of realtors, number one, they like to help people, right? And then number two, they like to have that flexibility. A lot of them have come out of the corporate world, have been in that. It's not even a 9-to-5 job anymore, right? It's really like 8 to 7, and then go to work when you get home. Right. Now, real estate can be the same, right?
It can.
But you do have some flexibility where you're not really necessarily forced to show up for 8 or 10 hours straight and do something on the same desk or whatever it might be.
That's right. And my opinion is, homes are legacies. A lot of people buy homes because they want it to be their forever home, or they're working up towards their forever home, and they want to leave that on to their children, pass it on to a family member. It really is an idea of legacy for me. And you not to down on the 9-to-5s. I've been there majority of my life, but you go to work and you work a certain hour and you come home and that's it. You get paid for that. But in this business, which I think is the greatest business in the world, you get out what you put in, and I think that's great.
And you can leave a small legacy on a family, right?
Yes,
help
absolutely.
them achieve that goal, and that home can be in their family for years to come, where kids will grow up and remember and create memories for the rest of their life. Because people do, like, remember that house that we stayed in? I mean, my parents are still in the same house, right? It's pretty cool. But all right, so real quick, we've got a couple of minutes before we take our first break, Curtis. I wanted to have you share just briefly, from your perspective, if you take Charlotte and you put your hands all around this whole metro area, kind of sum up for me and quickly what you think is going on, or what's the market like today, the housing market in our marketplace?
There's differing opinions on this. Some people say that it's too hot and it's a bubble and it's going to pop. I personally think that the 2017 real estate season for Charlotte proper and surrounding areas was incredible.
Yep.
I read in the Charlotte Observer that every single real estate sector experienced profit and growth, and I could see why. I personally have not seen the signs of that slowing down anytime soon. Home prices are still on the rise. Every single market analysis model that I've looked at shows a steady decrease in available homes and a steady increase for demand.
Absolutely.
The fact that the thousands of apartment buildings are coming up all over the city and around the city, on a pretty steady basis. And of course, Forbes magazine claiming that Charlotte is in the top 7 best places for businesses and careers. I don't think.
And the number one place for millennials to move to.
There you go. I actually did not know that.
Yep, number one city.
Yeah. So I don't see the market slowing down anytime soon.
Yeah, I don't either. And what we also know, which I've shared before in previous shows, is that there was a huge baby boom in 1982 all the way for 8 or 9 years straight, where there were more children born each and every year after 1982 progressively for like 8 or 9 years straight. Those babies are just now, the millennials are just now starting to buy homes, because they don't buy their homes at 21. They're buying homes at 30,
right.
32, 31, 33.
Right.
And so that population and demand is going to continue to grow for many, many years to come. So you're absolutely right. So anyway, so this has been a great segment. Good intros, guys. What we're going to do is when we get back, we're going to continue our show here with Reshair Radio. We're going to be talking about common obstacles that should not stop you from buying a home. Common obstacles that should not stop you from buying a home. I think we got like 8 or 9 obstacles. I don't know. There's a bunch of them, but we may add a few along the way. But again, you're listening to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending. Please stay tuned. We'll be right back. Hi, Chris Reshatar here with NFM Lending and host of Reshair Radio. If you are considering purchasing a home, you may wonder what your financing options are. We offer a variety of loan products to fit your situation, including conventional, FHA, VA, USDA, and jumbo loans. Here in the Carolinas, some of the most common loans are FHA and USDA. FHA loans are popular in low-income and first-time buyers due to their less stringent requirements. They also have low down payment requirements and tend to have a lower credit score requirement as well. USDA loans also allow low and moderate income households to purchase homes in an eligible rural area. Home buyers who do not qualify for a conventional loan may be able to purchase a home with USDA. If you're looking for platinum level service and open communication throughout the process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO NMLS license number 117266. Corporate NMLS license number 2893. Go to nfmlending.com for licensing information, and you can apply online at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending. If you have not listened to Reshair Radio, we just finished our first segment. We've got Jay McElveen with Goosehead Insurance, who's a guest here today. And we also have Curtis Gravitt with Real Estate Realty. Welcome back to the show, guys. So we are actually going to jump in and really talk about our theme that we're going to roll out for the next 2 segments here. And that's really, Curtis and I really we kind of sat down and thought, what could we bring of value to our show this Sunday? And he really said, I really want to talk about things that maybe misconceptions or obstacles that people think, reasons they think that they can't buy a home. and you and I see it both, right? Occasionally I get callers or you get people to call you and ask you questions. So what I'd like to do is maybe we just kind of jump right in and listen, or let our listener hear about what those are. And we've identified the first one is.
Yeah, the first one would be no money for a down payment. You hear that all the time.
Curtis, are you telling me I don't have to have 20% down?
Absolutely not.
Or 5% down?
That's correct. That is correct. Oftentimes there are plenty of assistance programs and no money down options out there that people can take advantage of, especially first-time home buyers.
Absolutely, and this is where, what I see in my industry is that, people will come and say, my mom told me that I have to put 10% down. And I think I'm supposed to be asking for a conventional loan. And then we discover things along the way that maybe they're buying a home in a rural area and they're eligible for USDA financing. Mm-hmm. Or they didn't know that their mom or dad or money from a grandma or an aunt or an uncle what we call gift, could be used for a down payment.
That's
right.
That's right.
Gifts is another way to help somebody with a no down payment or an option to get in with a down payment coming from a family member.
And sometimes from multiple sources.
That's right. So I actually did a loan last year where the lady had 9 gifts. We had 9 gift letters, 9 gift checks. Yeah, 9 gifts. It was a little overwhelming trying to document everything in a 30-day window, but we managed to get through it and she got her house. So, that's how it works. So really, one of the common obstacles that our listeners think is that they have to have money for a down payment. So the answer is no, because there are down payment assistance programs. You can get gift from family members. And what's another component you want to share?
A lot of times people often don't realize that they can also receive money from seller back at closing, in the form of a concession to help pay for those closing costs. And that can be negotiated in the price.
Right. So basically what you're saying there is, in addition to maybe finding a house and maybe getting them into the home with little to no money down, you have the ability to structure the contract, in some cases, not all, where the seller can some or a portion or sometimes all the closing costs.
That's correct.
I've seen buyers, and you've seen them too, where they're bringing a $500 check the day that they buy a $100,000 or $150,000 or $200,000 home.
Absolutely, and honestly, I've seen, and it doesn't happen all the time, but I've seen some of my clients be paid,
get money back.
That's right.
I know. Yeah, I've done quite a few of those in my career too. So we're not here to necessarily sell something that's not achievable. If you're a listener and you want to buy your first home, there are a lot of great programs out there. The city of Charlotte offers the House Charlotte program, which provides down payment assistance anywhere from $5,000, $8,500, sometimes $10,000. We have the state of North Carolina is offering up to $8,000 in down payment assistance for first-time buyers right now under their specialty program called the Home Advantage program. So there's lots of options, but we really don't know how to help you unless you give us a call. So let me give you my number real quick, and that's 704-277-4463. You can text me or call me, or just text me, say, I need Curtis or I need Chris. We need to get a loan, whatever it might be. And that number is 704-277-4463. So, all right. So, Curtis, that's one of the common obstacles that we see that shouldn't stop somebody from buying a home. Mm-hmm. Let's roll into number 2.
Yeah, so number 2 would be their credit being less than perfect.
So if their credit is not great, you mean there's a chance they could get a mortgage?
Yeah, absolutely. I think with all these programs out here nowadays, and you would be much more suited to talk about this than me.
I'm just going to see how far he goes with this. What's the minimum credit score, Curtis?
I believe it's around 580, but you'll have to correct me.
All right, but he is not the lender I am. So you're right. 580 is the minimum credit score for an FHA loan and sometimes other programs as well. Specifically to NFM lending, there are other lenders that have higher credit score requirements and some that may even have lower. But 580 is pretty aggressive. So what that really means for our listener today is if you think you want to buy a home and that's a goal and you want to create a legend for your family, then all we need is a quick text message, a quick phone call, and you can start with Curtis because it's so much more fun to look at the house than it is to deal with the mortgage loan. Or you can talk to me at Team Reshair at nfmlending.com. But you can reach out to us and we'd be happy to help you there. So don't let your marginal or low credit score stop you from buying. So I did want to say that this is a good opportunity for me to share that the process that I follow when I qualify a buyer may be different than somebody else that does mortgages. So first of all, we don't assume that you're going to be able to buy a home right away if your score is not great. So we will take a look at your credit, analyze the situation, and I will circle back with some suggestions on things that you can do. I send you a free copy of your credit report. And if you really need some help, then you may want to talk with my friends over at National Credit Care, Adam Kunda and his team, and they will actually do a free eval of your credit report and maybe help you strengthen your credit, maybe get some duplications removed, maybe help you establish some trade lines to strengthen your credit. National Credit Care, Adam and his team are actually sponsors for Reshair Radio. They're on our show once a month. So I definitely need to shout out to Adam and his team at National Credit Care. But I think it's important, Curtis, is that when you send somebody to me, and I've been there, I'm a sales manager, I have team members that report to me, and I've had many team members over the years report to me. And I've seen a lot of guys just say, oh, they had a 570 credit score, couldn't help them, and then click, they hung up. The realtor didn't really know what happened. The customer wasn't really put on a plan. The client wasn't given a copy of their credit report, and they weren't really given any hope as to that they could buy a home someday. And so I think a lot of loan officers will really leave an opportunity to help somebody when it's such an opportunity to do so.
Yeah, absolutely. And you know, I'd like to really encourage, if anyone out there is listening that feels like they're in that position, you know, the lower credit score, sometimes it's better just to have that plan, to know exactly where you're going.
It's called a path to home ownership.
Yeah,
that's what
exactly
I call
right.
it.
And, you know, it's hard to know how to get there or where you want to go if you don't know where you're at.
Right.
You know, so just
and
reaching out.
It's personal. Really,
Right.
at the end of the day, I recognize if you don't have a great credit score, you probably really don't want to text and call me and say, hey, run my credit. But you know what? Nobody better than a mortgage professional is going to guide you more when it comes to buying a home. And then if you really need professional help, we'll have National Credit Care step in. So we take a team approach. That's what it's all about. So the number is 704-277-4463, 704-277-4463. All right, number 3 is you're locked into a lease. How do you work with that, man?
Yeah, well, you know, sometimes it's more simple than people realize, especially if they're towards the end of their lease. Most often I hear, oh, my lease isn't over for another couple months. And, well, you know, basically when
That's the time to start shopping.
Yeah, it's
almost too late.
Exactly right. You know, about 90 days out from your lease being over is where you really want to start looking for a home, because once you find a home and get it locked in, get everything situated with your mortgage, and then go to close on it, usually by the time you sign on the dotted line, there is a 1-month layover before your payment is actually due. So
right, there's a delay or lag time.
That's correct.
In you getting your first mortgage payment, because a mortgage is paid in arrears. Unlike your monthly rent, you pay on the first and live there all month. The mortgage is the opposite. You live there all month and you pay your mortgage the first of the following month.
Mm-hmm, that's correct.
So you can time it really nicely.
And I actually have a client right now that I'm working with the same way. They're let's see here, it's April, May, June. So they're up in June, I believe it is. And you know, if they were to close on a home April 1st, then their first payment wouldn't be due until June 1st.
That's right.
So
because you're going to pay interest through the end of April on your closing document, and then you have the whole month of May to live there, and your first mortgage payment would be June 1st.
That's correct.
Yeah, so don't let your lease necessarily stop you from buying. In addition, you and I have both seen, I know in previous years, there's some great down payment assistance programs. Last year, we had one for $15,000. I asked one of my buyers, I said, could you break your lease to the tune of $2,500 if I could give you $15,000 to buy a home? And we had people thinking through, like, gosh, maybe it does make sense, even it costs me a little bit. Sometimes there's assistance programs that can get you in with your down payment, even sometimes covering some of your closing costs, that can stop you from renting for 3/4 more of a year and get you into that house sooner. And then really, honestly, the last piece really is just understanding that, you know, anytime somebody's in a lease situation, we want to make sure that you understand what the components of that lease are. We don't want you to be in any financial struggles or trouble as a result. So Curtis and I will pay close attention to that for you. So
Absolutely.
So that was number 3. In other words, an obstacle potentially stopping someone from buying a home. So let's hit number 4. What if they're just fresh out of high school or college? Can they buy a house?
Absolutely, they can.
Yes, that's what we like to hear.
They can because college is considered an employment.
Right, it's like part of your employment history.
That's right. So it can count towards that, and all it takes is just finding a job, I believe.
That is correct.
Yes.
Employment is important, folks. If you're listening, you can apply at themortgagegenius.com to get a loan done, but you have to be employed or have to make money of some sort usually. I know it's a high standard, right? But no, I think it's good to point out, Curtis, that occasionally I'll work with a buyer out of college or even out of high school that has a desire to buy a home, and they'll say to me, but I don't have 2-year work history. I talked with my bank, and they told me I had to be 2 years on job, and that's not necessarily the case. If you have a degree, you have your diploma, whatever it might be, in many cases I've been able to help really hundreds of people apply and get their mortgage to buy a home with that degree in tandem. Now, if you just laid around for 2 years and played video games in your back bedroom at your mom's house, that's probably not going to work. You do have to have employment after you finish schooling and show a consistent pattern. Excuse me here. So that sort of wraps up the number 4 item, which is really an obstacle that we're talking about here that could be stopping you from buying a home. We've got 4 more to go, but we've got to quickly take a quick break here. So stay tuned. You're listening to Reshair Radio. We'll be right back. Hi, this is Chris Reshatar, host of Reshair Radio and loan officer with NFM Lending. Is home buying in your future? Buying a home is one of the most significant financial decisions you will make in your life. Each step in the process is important to ensure a smooth transaction. But the most important step, even before you look at houses or call a realtor, is to get pre-approved. A pre-approval is when a lender evaluates a loan applicant's eligibility for a home loan. The loan officer collects information such as their employment, income, assets, and current expenses. The lender then gives the applicant an idea as to whether or not they could afford a home loan or an approximate amount of loan they could qualify for. If you're looking for platinum level service and open communication through the loan process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO license number 117266, corporate license number 2893. Go to nfmlending.com for licensing information, or you can apply online today at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending. I am really here to kind of bring back to you what we were talking about the last couple of segments. And we've got Curtis Gravitt here with Real Estate Realty. He is the realtor extraordinaire in our studio, and he came up with 8 potential obstacles that could be stopping you, one of our listeners, or a family member that you know, from buying a home, right? You're a realtor, you want to help people buy homes, right?
Yes, sir.
I'm a mortgage guy, I want to qualify people. We want to qualify lots of people. So you got anybody, please send them our way. But let's kind of go through and pick up where we left off. We had mentioned just briefly before the break, number 4, which was if you're fresh out of high school or college, it shouldn't stop you from buying a home as long as you have a job. Let's go to number 5, and that is, I have people often say, but I recently changed jobs. Mm-hmm. So talk to us a little bit. Well, maybe I should talk. I'm just going to jump in here and talk about this category. How about I take this one? So
right.
It's probably more my territory than yours, but I'm sure you've had people say, I just changed jobs, Curtis. What, am I going to be able to buy a home? And the answer is yes. So here's what's important for our listeners to know. If you are in a salaried or a pay stub or an hourly wage kind of situation, you change jobs because perhaps maybe the company across the street that does the same thing that you were doing before decided to pay you $1 more per hour, then that is a good job change. The lender who issues your potential approval doesn't really want to see you have big gaps in your employment, but if you've moved up and took a new job doing the same kind of gig, then that's a thumbs up. And you can't see it, but we're on radio, right? But it is a thumbs up. However, it can be a little tricky or sometimes not even applicable if you went from some sort of salary position into a commission-based job, into a self-employed job. In those situations, the mortgage lender is going to put the brakes on and say, we need to see that income be consistent for 24 months or 2 years before we can count that type of income. And sometimes we have somebody that will leave their salary job. They'll take another job with a lower salary, but with the opportunity to earn commissions. So it seems exciting because they see the potential for how much more they're going to make, right? And that can be a little tricky because the lender's only going to use that base income that we can guarantee that he or she will be making, and not the commission until we've seen a couple of years history. So yes, if you've changed jobs, we can absolutely help you. But sometimes the type of job change is going to be important to discuss with your loan officer, like with me at Team Reshatar here with NFM Lending. The other thing is that relocation is something, Curtis. Sometimes people will come in from other marketplaces and they say, you know what? We just talked about Charlotte being a great place for millennials to live. Well, they're going to get out of college and they may want to land here, but it doesn't mean they go to school here. Doesn't mean they're from here, right? Mm-hmm. So if they get a new job, let's just say with Bank of America, that is a perfect candidate for someone we can still use that education for their employment history. We get a letter from the company where they're getting hired saying when they start, how much they're going to make, and where they're going to be reporting to, signed by their employer, and boom, that's all we really need. Sometimes don't even need pay stubs for somebody like that if we have a signed employment letter right out of college. That's exciting stuff.
Now, this has a lot to do with what profession you're in and what you're changing to as well, correct? If you're moving from out of state and you're sticking with the same job or the same market
line of work,
right? Then that's different than just completely switching.
If you completely change careers, sometimes it can be okay, but that would be what we call underwriter's discretion. Okay, what that really means in English, folks, is that if you're one of those situations, you just have to come to us and we give it a try and see what the underwriter says. But most of the time, the lender can work through those conditions, those situations, because everybody doesn't live that perfect stair-step life where you're going from assistant to manager to mega boss, all with the same company, all doing the same business. People move around for new opportunities and sometimes completely change industries altogether. That doesn't mean they won't qualify for a loan. Very good question. All right, so why don't you read number 6 for me, Curtis? What's number 6?
Okay, number 6, and we touched on this earlier, but they don't have 20% to put down.
Okay, so if you are grandparents or you are parents, I need you to listen up right now. The old days where somebody has to put 20% down to buy a home, they've been gone for like decades. So please, please, please don't tell your children or grandchildren they have to put 20% down to buy a home. Am I right?
That's exactly right.
It's still out there, and I've been doing this for 18 years, and I still have people say, but I don't have 20% down, so I just don't think it's too early for me to buy. I'm like, I just got somebody in with no money down last week. So waiting for 20% down could take you 10 years. In the meantime, home prices are going to double, right? And you're not going to be able to afford that home after you save your 20% down 10 years from now. So let's get you in while you've got 3 or 5%. Let's take your tax return check and apply that to your down payment, or find a creative program that could help you get in with little to no money down. So I will tell you, though, that if you're doing a conventional loan where you normally would put 20% down to avoid what we call mortgage insurance, that oftentimes that conventional loan will have some format of private mortgage insurance. I just quoted somebody out today, or this weekend, excuse me, not today, and her mortgage insurance after 10% down was like $42 a month. That's like nothing.
That's nothing.
Right?
Yeah.
That's like half a cable bill, right? And that was put into play. And she said, I don't know if I should put more money down, whatever. I said, 10% down in your scenario. So the mortgage insurance is only $42. Really not going to stop you from becoming a homeowner. But in the meantime, home prices seemed like they're going up $10,000 a month almost. I'm exaggerating, but home prices are going up quick.
Right. And, oftentimes we run into this sort of issue when it comes to offering above asking price or putting a little bit more on the mortgage.
Okay.
And my opinion is money now is worth more than money 30 years from now. So sometimes it is worth it to keep your money for, in hand in cash and spread it out over that 30, 20-year period or whatever your mortgage is.
Right. We have those discussions quite a bit. Does it make sense to do 5% or 10% if you can do 10? And we kind of weigh out what makes the most sense financially for that buyer. All right, let's roll to the next one, which is number 7. Go ahead with that one, Curtis.
Number 7 is their debt to income ratio is too high.
Debt to income ratio. So that's obviously a pretty big concept to share over the radio here, but basically what that means is somebody has probably already tried to buy a home, and some credit union, bank, or loan officer has told them along the way that either you don't make enough money to qualify for the house you want, or you have too much debt, right, to qualify for the house that you want. So really what we see today as common hurdles really are going to be student loans, right?
That's right.
Or perhaps people having automobile loans. However, there are opportunities to employ what we call creativity in this situation. So I mean, sometimes I'll pull somebody's credit and I'll see that they have $75,000 in student loans, and you think, whoa, $75,000. But you know what? College isn't cheap, right? And some of these schools around the corner from where we're recording, you know, $20,000, $30,000, $40,000 a year. It's no surprise that some of these students are coming out with $75,000 in student loans. So how do you still try to buy a home, achieve the American dream when you're paying that big bill back? Well, here's what I know. Number one, student loans often have what we call an income-based repayment plan. Some lenders, not all, some loan programs, not all, will use that income-based repayment plan, particularly on a conventional loan. If not, sometimes we can have the buyer stretch out their current student loan payment over a 25 or 30-year window. And what we call is we create the fully amortized payment. So instead of the payment being $750, like in a $75,000 loan, we figure out how much, if we stretch that out over a longer window or period, how low can we get that payment so that we can help that buyer get into that home. Because sometimes those payments, if you calculate them at the full 1% of the payment, can be cumbersome. It can stop them from qualifying for a loan. And that's what they've heard before from other companies. And so I'm here really to say is if you think your debt to income ratio is too high, give me a call. Let's give you a second opinion to see if we can maybe use a little creativity, work within the lending boundaries or guidelines to get you into a home. Don't let your debt to income ratio stop you. Sometimes we can even recommend somebody refinance, because I see people go, well, that's my mom's car. That's my brother's car on my credit. Well, let's get that refinance back into your brother's name, even if he has to pay 12 or 14%. Don't let your brother stop you from buying a home, because the same home now is going to cost more later, and interest rates are going up, unfortunately.
Yeah, and that's exactly right. I actually just ran across that scenario with a client of mine. In order to close the home, and get what they wanted, they had to put about $1,500 down on a car loan and refinance it, and it lowered that DTI down enough so they can get approved and move on.
You know, people are kind. They do things for family members that they wouldn't normally do, and then sometimes they end up running over their own leg in the process, right? So they'll help a family member by taking on student loans or car loans. And sometimes, while that's very kind, if you have your own dreams and you want to create your own legend, be responsible. Don't really let people do that. And if you've done it, it's okay. They can always refinance. Where there's a will, there's a way. All right. So the last topic here before we take our break is this was really kind of your topic, but you had mentioned something about your expectations, in terms of obstacles stopping you from buying a home, because that's really our theme, is that sometimes our listeners' expectations are unrealistic. So why don't you share with me what your thoughts are around that, Curtis?
Where I was going with that is oftentimes what we get is, you get through the hurdles that we've just mentioned, and you're ready to buy a home. You're ready to go shopping, and there's very little to no research done as to what you can obtain with that approval. So you have people that think that a 4-bedroom, 3.5 bath, 2,000 square foot home for $120,000 is obtainable, and it's usually not, depending on the area.
You'd be a very popular realtor,
right?
If you had that listing.
I can't. I can do a lot of things, but making something out of nothing is not possible. But so I think it's best a lot of times to sit down with a professional, with your realtor, with your lender, and say, okay, what is reasonable here? I want to be in Gastonia. I want to be in Charlotte. I want to be in Concord. What are the median home prices? For this size of home that I need, what am I looking at?
What's about average for this price range?
Exactly. So you can set up some expectations that are realistic, and you don't get your feelings hurt or let down so much, and you're walking into it prepared to see what is in your price range or your ability to buy.
I think you make a good point too when you talk about it's probably better to get into a home now and to work up toward what you really want down the road. Build equity in your home, even pay extra on your mortgage, do what you can so that you can step up into that next home, 2, 3, 4, 5 years from now. And then maybe, because really not all goals, like you don't win the gold medal the first time you swim, right? You have to swim tons of races over the course of many, many years. So people have to think about that dream home of theirs may have to come in phases. And I think that's more realistic. So the housing market, you're not getting as much money for your dollar that you used to even just 3-4 years ago, but it doesn't mean it's not worth giving it a try. So this has been a great topic, really 8 obstacles in your ability to buy a home, really that don't need to be there, that we can work through. And so I'd encourage you to listen back to this segment, and you can listen to it on my website, and that's reshairradio.com. That's RESH, the word air, the word radio.com, reshairradio.com. It'll probably take a few days for it to get up on the site. And Curtis, it's been great really going through this topic. So we're going to take a quick break, and we'll be right back with Jay with Gooseheads. So please stay tuned. We'll be right back.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home or buying a new car or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending. And we've just been we ran through 3 segments. And Jay, you've been in the studio here this morning with us. And I really appreciate you coming on. We've been working together for a little while. You've been taking great care of my clients, really delivering fast service and affordable payments for homeowners insurance. But really, I want our listeners to kind of get a better idea of who Goosehead Insurance is and how you're different, et cetera. I think there's a lot of people don't know the difference between the big nationals that we see in our nightly commercials, that who knows how many bazillions of dollars that they're spending to get your business. But you're more of a local guy here, so
right.
I'll throw it at you. Why don't you tell us about Goosehead Insurance?
Okay. Goosehead was founded in 2003. We're headquartered in Dallas. We started franchising in 2012. So when I came, or let me step back, I used to be in the captive side. So I know.
Which means what?
Captive side, so that's your State Farms, your Allstates, your Nationwide.
Where you maybe took phone calls in from callers from marketing and advertising.
Right, exactly. They are marketing machines. Great companies, but marketing machines. And they can offer one product. What we do at Goosehead Insurance is we're pretty much a broker. I'd say a concierge. We work with a lot of different carriers rather than just one. So when your premiums go up, which, every carrier has premium increases every single year. So when your premiums go up, we can offset that by moving your insurance to another carrier. Rather, these big captives cannot do that. When your premiums go up, they get you in at a lower price. They say bundle to get you lower. But yet your premiums, you'll see if you're with one of these for 15 years or even just 2 or 3 years, you'll see your premiums rise. But that was where I got really, really frustrated.
It's called graduated profit, right?
Exactly. I could not I could not find a solution for my clients, and they would finally leave and say, I'm going to an independent. So that kind of that broadened my horizons. I got curious. What is this independent side? What is independent insurance carriers? So I did my research. Goosehead was the fit for me. Goosehead has been an absolute blessing to my family. So what Goosehead is like I said, we work with over 25 A-rated carriers. We work with lenders such as yourself and realtors as well to help their clients get that DTI ratio down. That's what it really is.
And we talked about that in our last segment.
Exactly.
That sometimes stops people from buying home.
Exactly, and it really does. So we come in that way to really show you some other options. I put people's information in a comparative rater, and I send it out to 25 carriers, and I get quotes back. And I pick the lowest quote, and then I tailor that quote to the client. I don't just have clients are not a number to me; they're actually a client. I look at myself as an advisor, not just an insurance agent.
Okay, that's great.
Yeah.
So with Goosehead, so when I refer a client over there, you're basically taking the parameters of their purchased property, meaning the house that they're going to buy, putting that information in addition to the information from the client, and then you're getting quotes back from different carriers saying, here's the insurance that we'll provide at these premiums with this kind of coverage. Because It's not always about the premium, am I right?
Right, and so many clients have that misconception. When we email quotes, it's something I don't like to do because I like to talk with the client. I want to look at the guts of the policy. I want to see what your coverages are. I really want to tailor that quote to you and that policy to you because so many people have a misconception. They look at just the bottom of the quote to see what the premiums are. And 9 times out of 10, Goosehead, we are the best price because we have so many options. That said, I don't want my clients to focus just on price. When you're insuring your most important assets you have, and that it causes you to be in such debt, it's good debt, but it's your largest asset. Why are you going to skim a few dollars a month to have the coverages you shouldn't have? It's the same thing that goes in auto insurance as well. So many people I find are underinsured, and they could increase their coverages for maybe another $1 a month, such as your personal liability, your medical payments, things on your policy, the endorsements you have. Every single policy I come across is usually there's a huge gap in insurance. So that's where I kind of find a lot of my value comes to clients.
So talk to our listeners a little bit more about what some of those coverages look like.
Okay. So, coming out of the gate, you're looking at your dwelling coverage. Some people say, well, how do you get that? Well,
house.
Right. The actual house,
Okay.
the brick and mortar. They say, how do you come up with that figure? Well, we run several replacement cost estimators. We look at your square footage, what custom
The materials it's made from.
Absolutely. What area it's from. So you want to at least start insuring your house at a certain amount per square foot. I come across houses all the time that are insured for $85 a square foot, $100 a square foot, and talk to any builder in the Charlotte area. That house will not be able to be built back for that amount most of the time. So you're really the coverages are so low. When something does happen, you're going to be coming back to your insurance agent, and they're going to say, well, you signed the piece of paper. They didn't work as an advisor. They worked as an agent. And it was just to get you out the door, and that's not what it's about with me. We actually take some time with you. And that's how we're building our business. We have a 98% retention rate, and that's why we do at Goosehead, because we really work as an advisor to you. So down the line, we won't have to worry about those issues, such as scheduling things on your policy. People do not know. They say, what do you mean scheduling? I thought my policy covers those belongings, my gun collections, my paintings, my wife's or your husband's wedding
Jewelry,
ring. Exactly.
right.
And people have to miss it.
Artwork.
Exactly. And most times it's worldwide coverage. So you got to add those things on your policy. And it's so important to go over that with your agent. Hey, I realized I didn't have my wedding ring on my policy. It's a $25,000 wedding ring. Well, if your house burns down and you have it in the home, it's not covered. So that's very, very important.
I'm not so sure the guy's making smart decisions for that kind of priced ring.
Exactly. Yeah.
But maybe he'll do the same when he wants to buy a house with you, Curtis. I don't know.
So.
Yeah.
All right. So that's what scheduling is. So you can add things on to the policy. And in some cases I've seen where I've had people where that premium needed to be super tight, but they wanted to add those premiums. So we got them into the home, and then we put them on a special premium after closing.
Right. And that's no problem. I understand the price needs to be somewhere, but we certainly won't, lower coverages to make that price there. But there are ways, you can very creative ways to get that premium down, and we do that by having so many choices for our clients.
Awesome. So talk to us a little bit about our listeners. We do hear that bundling word all the time, and that you and I both know that a lot of times if you want the best premium on your homeowner's insurance, that they should consider talking to you about their car or auto insurance. How does that work?
So bundling is a way to get your premiums down. And it gives you a significant bundle. We have a lot of carriers that are monoline home. We have a lot of carriers that bundle. And I don't use it as a selling tactic. It is the honest truth. You can save some money. And like I said, these larger captive carriers, that's a selling point for them. So
it works on your side, brokering as well. Even though you're not using one carrier, you can use the same strategy.
Absolutely. And what's great is our homeowners prices are so low that, it's going to help you even more get that DTI down if we bundle the home and the auto. And then you go into, they say, well, let's look at an umbrella coverage, because let's say your home is worth $750,000, okay? Yet on your homeowner's insurance, you have a $500,000 limit for personal liability. Well, you have a $250,000 gap right there. If your home, if something were to happen, somebody can sue you and take your assets. So that's when we say, okay, well, there's a personal umbrella. People have no idea what a personal umbrella is and what it covers. And, it covers your gaps in insurance. And you can usually get it for about $150 to $200 a year extra. And it's $1 million worth of extra coverage. So
$1 million.
$1 million worth of extra coverage, So
for $150 to $200 a year.
Yep.
Folks, do you see why I have good people like Jay on our show? We've got to have good people to refer my clients to, and Jay, and the way that he operates his business is really huge. So I personally have an umbrella policy. I think I've got one that's even a little bit bigger than that, because it just, I've got a trampoline. I've got, kids over my house all the time. You don't know when someone's going to fall off your front porch. You just don't know, and you don't want that whole dream that Curtis, right? That whole sort of leaving that legacy of this house. You don't want that to come back and burn you because you went too cheap on your insurance, or you went with maybe a national carrier who just gave you the quote over the phone but didn't really take the time like Jay is trying to be your insurance advisor. So super awesome. I really appreciate you sharing that segment with our listeners. And Jay, hope we can get you to join Reshair Radio as a regular sponsor. No pressure, but my listeners are hoping that's going to be the case, because they liked you a lot here today.
Absolutely.
So we just got a minute or two here to kind of wrap up the show. Curtis, I wanted to say thank you for coming on. Do you have any sort of special offers that you'd like to share with our listeners today that would be important for them to maybe consider using you?
It's one of those things where I don't usually offer anything special above and beyond my expertise.
Okay.
But if you do call in and say that you heard about me on this show, I will offer a home warranty as a credit.
Ooh, home warranty. That's like a $500 value.
Yes, sir.
Just by talking to you and listening to this radio show. And we've got Jay over there saying he's going to give you a great premium for better coverage. He can't put that out on the air any further than that, though. So it's been a great show, guys. We're here to add value. That's what Reshair Radio is all about. We'll be back again next Sunday at 10 o'clock, every Sunday morning at 10 a.m. here on ESPN, The Game 730. So if you have any questions, you can give me a call or shoot me a text. The number is 704-277-4463. That's 704-277-4463. Call me, text me, say, I need Jay or I need Curtis. You need their help. I'm happy to get you guys connected at the beginning of the week. As always, thanks for listening. You can find our shows at reshairradio.com. Have a great week, and we'll see you next Sunday. Thanks, guys.
Thank you.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com. You've been listening to Reshair with Chris Reshatar, a seasoned licensed mortgage consultant with Movement Mortgage, equal housing lender. Originator license number 117266. Learn more online at themortgagegenius.com.